My name is Steve Beauregard, and I'll be moderating the panel, not Mo, because otherwise I'd have those cool glasses on. Anyway, I'm joined today by a number of folks that have been in various parts of the payments industry. Back in 2013, I founded a company called GoCoin, which is a payment processor, and at the time, the only two companies in the space doing that business were BitPay and Coinbase. So we joined and became one of the big three merchant processors for cryptocurrencies. The way we sort of distinguished ourselves in the early days was to open it up to just not just Bitcoin, but a number of other coins. We turned on Litecoin, and then to really piss everybody off, we turned on Dogecoin too. And everyone sort of went a little bit nuts at that. But it really proved the resiliency of these blockchains and so forth. But anyway, ran GoCoin for about 4 years. Recently joined a company called Bloq. Bloq does a lot in the enterprise space with large enterprises, helping them with their internal systems as well as some cloud services we're offering through APIs. Anyway, that's me. I want to go down the panel and have everybody spend a few minutes introducing themselves and what they're doing in the space.
Well, my name is Drieenhuizen. Orange socks, I'm Dutch, so you can not forget it. Although your pants is orange as well,
that's
so
right.
Not really matching there. Anyway, I have been in the payment space for about 8 years. I worked for a couple of PSPs. I was actually working for one of your competitors, BitPay, for quite a while. I predominantly did sales there, and I do that still today. And I'm now active at European Merchant Services, which is a credit card acquirer. So on the other side, really, and that's also the perspective that I like to give today, to see and explain a little bit on what happens on the other side. How does the credit card space look like, and the alternative payment method space, in comparison, of course, with what blockchain payments can do.
My name is John. I'm with Origin Protocol, and we are a blockchain platform for decentralized peer-to-peer marketplaces. So we're built on top of Ethereum, but have a very similar mission to OpenBazaar, who you guys just heard from their CEO, Brian. We want to enable free and open commerce and essentially do our best to cut out the middleman. And when you cut out the middleman, the fees go with it, and there are a lot of other really interesting benefits as well.
My name is Marjan Delatinne. I'm working for Ripple. Joined Ripple 2 years ago, and coming from the old world of Swift, so I'm very happy now to be on the bright side of this payment space, and happy to be here, and hope I can provide some insights about what we are doing at Ripple.
Great. So, Marjan, I'd like to start with just a quick Ripple question, and I brought this up to you in the back. Lots of times when we talk, especially among people that are sort of Bitcoin maximalists or folks that are very into the crypto trading segment, they'll often talk of Ripple and sort of disclude it from the rest of the cryptocurrencies. And so I wanted to give you the opportunity to sort of explain where Ripple fits in the marketplace and how people should be thinking about that.
Yeah, I think that's a very good question, and thanks for asking that, because indeed there are lots of confusion around Ripple company and XRP, which is our digital asset. So Ripple was founded actually, basically XRP was created before the foundation of the Ripple. And it was part of that was gifted, something like 65% was gifted to Ripple in order to create this new payment ecosystem. So when you are talking about XRP, and obviously I'm sure that some of you have already invested in XRP, so we are talking about a retail case where as a individual investors you can buy XRP, but the way that we envisage that more in our business model, XRP, and probably is good to know about it, is mainly to address a problem that exists today in the international payment space, which is around how you optimize the usage of the liquidity. As probably you know, I'm not giving you some example, but when you are sending money cross-border, you are using your banks, obviously, and your banks maintain liquidity in the destination country. And this liquidity has a cost, that it is somehow charged to yourself. So the way that we look at the digital asset and XRP in this case is that how you can source on demand liquidity without maintaining liquidity on the destination country or even maintaining an account. So that's very important to understand. It's going beyond just the individual investments, and it is addressing, let's say, a larger scale problem that has a significant cost for the global economy.
I was going to say, and I think that's important in the case where if somebody has to step in, with Bitcoin, there's no recourse. There's no way to have anybody, sort of get involved in that transfer. Whereas with Ripple, you now have the ability to sort of regulate that to some degree. So I think that's important for banks and for regulated institutions. So anyway, just sort of going back to 2013 when we first started GoCoin. At that time, BitPay was, bringing on companies like Microsoft. I think Coinbase brought in Overstock, and it was really exciting. And we thought the big race was to the big merchants and who was going to go, quote, mainstream. And so I'm going to, first address this to you. You worked with BitPay for a while. What were some of the hurdles you heard from merchants that were sort of preventing them or keeping them from going and signing up and taking crypto in those days?
Yeah. So I'm in sales, right? So for sales, it's important, of course, that you make your profit and that you find methods that can help you in making your business more profit. So the conversation every time with any merchant was always, well, will this help actually increase my profits? Will it help me sell more? There were a few verticals where it would help. Some of the verticals, one of the most successful clients we had back then was a food delivery service. And that just was really appealing for the target market, which were young guys, tech savvy, looking to have a quick order online. So that worked very well back then. But we also targeted payment service providers. And for them, the hurdle was even bigger because they, of course, had to convince their merchants in selling.
And give us an order of magnitude.
Yeah.
You talk about traditional payments with credit cards and the crypto payments. Like, how much bigger is the credit card payments versus crypto payments?
Well, if you just look at numbers, at the moment it's about the volumes that are made just by credit cards, right? I mean, this is the biggest payment method at the moment. So I'm leaving out all the alternative payment methods. You're looking at around 20 trillion in volume. That's been going through annually through the systems on online purchases or offline purchases.
Yeah.
So that's the number that we're looking at. It's about 250 billion transactions each year.
Right. And I remember BitPay at some point announcing they'd hit 100 million in payments, which is just not even a trickle in comparison.
Yeah.
And so
I think these days I do around 1.2 billion. So that's much more than back then.
Yeah.
And
I also remember at that time, all of us were out there, and the pitch to a lot of the merchants was, you're going to get all these net new customers from the Bitcoin ecosystem. And that played well for a very short amount of time until they realized they'd sign up, they'd have this press release, and then you see this trickle of transactions, and then it sort of would go back to a sort of flatness, unless they were in a very edgy market.
Exactly, yeah. So for retail, for example, it wouldn't really sustain, like you said, but some verticals it would, because it fits the target market.
Right. So in terms of, I think it wasn't until about 2017 we started seeing real scalability problems in the market. And one of the topics of this panel is to talk about the layer 2 solutions and how they could possibly play in. Do you have any comments on that, John, or maybe give us a little insight into why you've put your protocol together the way you have?
Yeah, when it comes to scaling issues, I think they're very apparent. Our protocol is built on top of Ethereum, and in order for us to see mass adoption of these peer-to-peer marketplaces, you really have to have an infrastructure that's going to be able to scale, and that's certainly going to happen over time. So I think what you'll see is an evolution of, in our case, marketplaces that can survive even without some of these layer 2 scaling solutions in the short term. So if you think about high value, low volume transactions, they have a much better chance in the short term of making sense in a decentralized marketplace. So an example of that would be something like home sharing. You only maybe rent a home a few times a year. It's usually a pretty big purchase. Things like transaction fees or how much time you have to wait for the transaction to finalize aren't as important compared to something like Uber, where you need it on demand. it's a small transaction value. You take it every day, every other day, or something like that. So there's definitely going to be a kind of a gradual ramp up, but we're very excited about some of these layer 2 solutions, and we think that some of the smartest people are working on how to scale these blockchains, whether it's scaling the underlying blockchain itself or adding something on top in this layer 2 type of case.
Gotcha, gotcha. So if you remember, like when CryptoKitties was launched on the Ethereum network, and then just it was about a month back, maybe a little bit more, where Fcoin was launched, and the gas fees went from a couple of cents to a couple of dollars up to as much as like $50. How do you see, what solutions can be put in place to prevent those types of events?
Yeah, it's difficult. I think you have to attack it from a few different angles. You certainly have to do your best to solve the technical challenges, but I think there's some other interesting approaches. So, for example, gas costs are prohibitive for users just in general to transact on these networks, right? If you think about things like buying something on one of these marketplaces, or even leaving a review or trying to enter into a dispute, these things will have costs. They'll have gas costs. So what we're going to see is either at the protocol layer, like where we're at, or even on the application layer, you'll see basically sponsors of these gas costs. So we're going to incentivize our users to do things that they probably don't want to pay to leave a review, but if you make up the cost for that review and potentially incentivize them on top of it, then they're going to be more likely to leave a review, which is obviously better for the health and the growth of the network over time.
Right, right. Now, Marjan, what are some of the use cases that you see that hold a lot of potential in sort of driving a lot of adoption of cryptocurrencies and payments?
Well, I think when we talk about cryptocurrencies and the way that our perspective is digital assets are really the best use for them is for settlement. And the blockchain technology, I think, is the best use if you really take advantage of the benefits that it brings is for payments. I think the way that we see that, we split between what is really the clearing side of the payments versus the settlement, and I think that's very important, and then you see how the use cases can be beneficial. So where we see really blockchain getting into a value to, at least in a real global scale, is the fact that there are different systems today. And blockchain is there to somehow keep track of the records and accounting system and position into these ledgers. So the way that we perceive this, and from our work point of view, is we are in a very fragmented market with different payment methods, different payment systems, and that creates actually the challenges that today exist in terms of exchange of the value. So when, for instance, imagine that you are ELO user, card holder in Brazil, and you want to send funds to a merchant that it is acquired by PayPal. This is today very complicated. So where we see the force and strength of the blockchain is how you can interoperate all these different systems that today are silos. And that's where we have been really investing a lot into a common protocol, which is called Interledger Protocol, which is an open source. But the main advantage of this protocol is to connect any kind of ledger or any kind of networks. This provides, let's say, an experience to the users that it is very close to the way that internet is working. So you don't really take care of how the payment is happening. You just exchange value like you exchange data.
Right. I'll put this one out to the panel in general. When you look at scalability issues, and you think about a Casper network or a Lightning network, and you think of use cases. I know in the case of payment processing, where you have to create a unique address every time, it's not a great solution for a BitPay or a GoCoin to use this type of solution. But can you think of some use cases where a Lightning network might be appropriate to apply?
Well, I'm a little bit more focused, I would say, on Ethereum, but to speak to essentially their layer 2 solutions, I think at its current state, most of them are really just focused on payments. So their Plasma, for example, which is a layer 2 solution on top of Ethereum, what they're calling minimum viable plasma, MVP, is a UTXO chain. So it's very strictly payments focused. So in the context of a peer-to-peer marketplace, there's still a lot that needs to be done for these layer 2 solutions to handle general state transitions, which is important when it comes to
you have to keep the
peer-to-peer.
nodes running, and you got to keep those operational. And if they're offline, then that's going to
Yeah, sure.
right?
Yep.
So that's certainly a problem. I think that's probably one of the main challenges and hurdles I see with those type of solutions. I mean, the Bitcoin network, it's always up and it's always available, and you don't have that sort of thing. What about you, Walter? In terms of use cases, even if it's just in traditional payments, traditionally it's been the high risk, high privacy kind of places where the merchants. Do you see it going a little bit more mainstream, or what kind of places do you see growth?
Well, it's difficult to see, find out whether I see the growth or not, but I do see some applications that could be interesting. For example, actually marketplaces. This is a very difficult sector to facilitate with the traditional payment method that we have. So credit cards is very difficult. The reason for that is there's a lot of regulation around it, and it's very difficult to, for example, receive monies on behalf of another party, and that's
Right.
of course, the key thing here in marketplaces. So I think if regulation somehow allows for example, your solution or Open Bazaar to enter that space, I think there will be many interesting parties there already and open for this technology to embrace.
Yeah, that is quite interesting. I think taking the payments on behalf of another that definitely creates a lot of friction in the space. The other thing that created a lot of friction was in the U.S. They gave IRS in 2014 gave guidance of every event was going to be taxed because they were going to tax it as property, and that really very much hurt the payment business and merchant payments in particular. So one of the things, there's some laws that have been put forth in the U.S., or not laws, but there's been some bills put forth to make anything de minimis, say below $600, to no longer make those taxable events. So I definitely encourage anybody who's U.S.-based to try to get behind those, write their congressman, and I think that'll make a huge difference in the payments business. So we have a couple of minutes here coming up. So Marjan, when you think of regulated spaces, where do you see this starting to transform, like the SWIFT systems and some of the other sort of traditional ways that you're moving money around internationally?
On regulatory side?
Yeah,
I think, well, I attended a few other sessions before, so you cannot be in the payment system without being mindful of the regulation. And we see
Right.
that if we want to really go mainstream, if this new technology and the crypto assets will become mainstream, you need regulation around it. So I think from Ripple perspective, we have been very closely working with the regulators, ensuring that they understand when we talk about the digital assets, what use case are we talking? That was exactly the institutional use case, and what problem we are addressing. We see clearly an improvement in terms of understanding of the regulators of what is behind that. But obviously, it's very important that the consumer protection is there, because we are a consumer at the end. And I think when you think about the payment space, there are so many regulations already that exist around payments and the consumer protection. And I think what we see more and more, regulators are looking at how they can apply that into the digital assets space. And I think that's a very good indication for this era.
Right. And John, a question about wallets. I'm going to transition now sort of into wallet technology and the wallet role inside of the transactions. How do you see the wallet tech starting to be impactful in these marketplaces and the standards that are starting to evolve around those? Do you have some thoughts on that?
Yeah, I think a couple things that come to mind would be, so identity. This is one of the main problems you really need to solve to enable these trustless peer-to-peer transactions. And in the world of Origin, the way we were approaching identity is essentially, we're actually using an open standard called ERC 725. And essentially, you attach your Ethereum wallet address with claims and attestations to prove that you are the owner, let's say, of a Facebook account, Twitter account, a phone number, or an email address, etc. And you can imagine this extending to other things like your physical address in a home sharing context, etc. So the wallet, in a lot of cases, is going to serve as your identity, and in our context, it's portable. So you can take this identity and this reputation, let's say, that you've built on your home sharing marketplace and leverage it elsewhere, which is very interesting when it comes to joining a new network. Instead of starting from scratch, you have something to go off of. It also makes customer acquisition much easier for these marketplaces. And on the other side, I would say what comes to mind is usability. So UX is another huge known issue for the common average person. You know, they don't understand managing private keys, etc. Or even something like logging in. Logging in is a totally different paradigm in this decentralized application context. So right now, what's very common is MetaMask. It's a browser extension that is pretty widespread, but it's still not very intuitive, and it's not in line with what people expect, which is just like typing an email and a password or something like that. So what I've seen lately is wallets acting as essentially a way to log in with a QR code, and it's surprisingly a much quicker process than even typing in an email and going to your LastPass and getting your password and putting it all in. You just click login, it pops up a QR code, you point your phone at it, and you're logged in. So I think these types of innovations are going to go a long way in bringing these decentralized applications to the masses.
Yeah, I think the wallet tech has been the long pole in the tent for quite some time. I'm glad to see Jem, who's here, Micah, their team getting back into building wallets. Paul, who formerly Airbits and now Edge, starting to do a lot of innovative things with their wallets, and a number of others as well. So, Walter, do you have any sort of closing thoughts on trends or what we're going to start seeing in payments, and comment on the wallets as well, and what you sort of see going forward? So, say 5-10 years.
Yeah, for sure. Well, I think if we look at the future, it is going to be a lot of payment methods that are going to fight for their existence, right? A credit card will still, be there for a long, long time, but it's challenged now, for example, by blockchain payments or other currencies. So that's, I think, very important to see that they're going to be challenged and that they need to change. I think what also is very important that not only those companies need to change, but also the middleman. Again, with my sales hat on. I come across a lot of companies, a lot of payment service providers, for example, that just don't see it yet. So they need to be convinced, and that can only be done if it's actually going to be an interesting product for the end customer.
And do you think it'll be like a hybrid? Like you'll see, some of the old ISOs and these guys start to get in and add crypto to their war chest of what they're selling? Or do you think it'll sort of stay separate, or it'll be sort of a battle of old versus the new, and the new ways will start to replace the old?
I think they'll have to at one stage, because what you see is that a lot of merchants who sell the products online, they like to go to one player. So if that player is an existing PSP, for example, and they have the question, or they ask for that PSP to add, let's say, cryptocurrency, then they'll have to. So of course there are players like BitPay and of course GoCoin that are targeting it specifically with only one product, but I think they'll have to join forces at one stage, because it's what the customer actually is asking.
Right, right. We're starting to get low on time, so I'm going to go to closing thoughts. Marjan, we'll start with you.
Well, I think this is a very exciting moment in this space, and understanding the needs and being agile in terms of delivery and going live in real products that brings value, that's really important. I think that's where should be the focus in the coming years.
Yep. John?
Yeah, I'd say thank you for moderating, thank you for listening to us. And one quick thing that comes to mind, talking about wallets and even traditional credit card space, is, if you look at Asia, they are already very mobile friendly. They are already, you know, kind of past the credit card phase, and a lot of places only accept payment through QR codes and WeChat.
or-
Exactly.
Yeah,
So I
that's
think
great.
you're going to see a lot more user adoption on that end
Totally agree.
in the short term. And there's also some interesting wallet applications I've seen, like Balance, that will allow you to actually do things like stake tokens through the app. So I think it's going to open up some interesting innovations.
I think we just got some bonus time. So,
Yes, seems
all
like.
right, they threw me off. So I think they should have warned us. So, but I think you got a great point that, you know, traditionally the credit card companies have been thinking that their competition is each other, right? But actually it's the WeChats, it's these new apps. I don't quite see how Snapchat plays in this, but you know, I know that they have been looking at payments as well too. But the idea of something that just goes away and that being your payment, I don't if that really merges very, very well. But anyway, so do you have some thoughts along the same lines of these trends and the, you know, wallets and so forth?
Yeah, I think the point that John makes is definitely very valid, where there are certain areas where, for example, again, credit cards are so embedded that are going to be much more difficult to change. In the Netherlands, for example, we have only 10% credit card transactions, and about 56% is ideal, which is a bank-to-bank payment, so maybe that's where, you know, Ripple can do something in there, but that's a much easier step to make, to go from what I'm used to a cryptocurrency, for example. So every jurisdiction, or sorry, every area has its own challenges, and yeah.
Do you think we'll ever be at a point where you have, say, Airbnb coin or a Uber coin, and you have a wallet that does a shape-shift kind of thing where, hey, I have Bitcoin, but now I need Uber coin to pay for my Uber, or I need the Airbnb coin to pay for this? Do you see that as a possible future, or do you think it's going to be sort of a couple of major tokens that we have, and that's what it's going to be?
I find it hard to answer that question, really, because it has to do with a lot of the technology going on in the crypto space at the moment.
Yeah, but speculate. Come on, let's have fun. I mean, think about, you know, 10 years from now. Will we have Domino's Pizza coin? Will we have a bunch of them, and just it switches within our wallet, and there's a little bit that goes to a exchange that happens every time that you need to use it, or is it going to be just, oh, we have one, and the winner takes all?
I think it depends a little bit on also the loyalty aspect to it, because that's, I think, an important element in order to have your own coin, right? So, you know, you attach your name to it, you might be able to put some additional loyalty type of applications to it. But if that fails, or if that's not something that's going to be prevailing, then I think the key is that there should be a consolidation, though, of coins. There should be at least one that's really strong.
Right. John?
Yeah, I'm happy to chime in here. This is something we think about a lot in the marketplace space, because a lot of our marketplace partners have their own token. We're built on top of IPFS, which eventually will have Filecoin powering it, and you can imagine many other tokens being involved in these transactions. So yes, I think there will be a lot happening behind the scenes. The user may not need to know that they have, you know, 10 different types of tokens in their wallet necessarily, but I think just like when you go to Amazon today and you click purchase, a lot of things are happening behind the scenes. Right. They're probably pinging a Twilio API and, you know, SendGrid API, and all these different technologies are powering this one-click transaction, but you as the user don't really need to know any of that. So I think that's the future that I'm hoping we see pretty soon, where, you know, a user may not even know that they're even interacting with a blockchain underneath. They just know that, you know, I want to rent this home, and the fees are 20% less than they are on these centralized platforms. So I'm going to go with the decentralized version.
Totally agree. I'm getting the wrap-up call, but Marjan, quick closing. What are your thoughts?
Well, I think that's all said. From what we see is micropayments is one of the initiatives that Ripple is, well, I mean, actually our CTO our ex-CTO has developed a new initiative which is called Coil, and I think this is around how you can enable micropayments by using digital assets. The idea was already in place and it didn't work, but if you use a digital asset that it is efficient and modern for a settlement, that could be a very interesting experience in the coming years. I think that that would be
Okay.
our thoughts.
Excellent. Well, thank you very much. Thanks to the panel for very thoughtful input. So.
All right, thank you, everybody. And thank you, Steve, for moderating that.